Well, as we've been reporting, interest rates are higher. The Fed has taken action. They plan to continue to raise interest rates. So what should you be doing to protect your money and maybe increase your wealth? Joining us this morning is Stewart Welch from the Welch Group to help you out with that. Good to see you this morning.
Good morning.
Yeah, we know the Fed's going to keep making these moves because they're trying to get control of inflation. So interest rates are going to keep going up. So what should we do? What are some things we need to keep in mind?
Well, first of all, inflation's like 8.6%. That's a really big number. Yeah. And some of the commodities, things we buy every day, are super expensive. Like gas has gone up 43%, eggs 44%, bread 40%.
And unfortunately, a lot of people are using their credit cards to pay for some of that stuff now because they have no other options.
Yeah, they are. So it's having a big negative impact on credit cards, car loans, furniture loans, home equity loans. Mortgage rates have gone up substantially. So I think the first move is if you have savings, a lot of people don't, but if you do have savings, you want to maybe move that and pay down some of this credit card type of debt.
Yeah, because you don't want that stuff compounding because it's gone through the roof.
It's a big number. You're going to then use your credit cards that you paid off as your backup emergency fund. So it's a little bit of a switch from what we might normally do.
And if you have that money in savings, it's actually probably earning a little bit better interest rate.
It is, but it's not enough to offset inflation. So.
All right, what about home equity lines of credit?
So home equity lines of credit, they have definitely gone up. So every time rates go up, they go up. I think what that means is when you look at your home and you're thinking about moving, realize that the next house, your mortgage is going to be much higher. You probably have a mortgage that's under 3%. The new mortgage is very likely to be at 6% or higher. So you want to be very careful if you make those moves. It's softening the housing market across the country. Here in Birmingham, it's actually holding up pretty well.
Yeah.
But that's probably going to give way if these rates continue to rise.
So you may get more money for your home selling it, but you got to go find another place to live. That's probably going to cost more, and it's going to cost more to borrow money to buy the place.
It's going to cost a lot more. You're really going to feel that in your mortgage payments. So you want to be really thoughtful when you make that move.
All right. Well, this segment has nothing to do with alcoholic beverage sales, but let's talk about now. The last part of this equation, which is a lot of people are seeing their 401ks just really take a hard dive right now, and they're worried about a recession. So what if somebody has in their allocation, they're younger, and they have their money in some growth stocks, some stocks in their 401ks?
Yeah, I would continue to be very confident in the stock market.
Really?
This is something that the market does, particularly if you're 5 or 10 years away from actually needing the money in retirement. The market always comes back, and in a 401k you're contributing every month, so you're starting to buy more stocks at lower prices. When it turns around, you're going to get a big benefit.
And we've seen that happen historically, but I guess if you're closer to pulling that retirement money out, it should already be in some safer areas.
You would hope that you've done that ahead of time. Now might not be the moment to do it.
What about bonds?
So bonds, there's a special bond people ought to pay attention to. We won't go into a lot of detail this. It's an I bond. It's a credit of the federal government. It is currently paying 9.6%. You can Google it, I bond. It's a limit. You can't buy more than $10,000. And there's some penalties around if you try to get out early, but 9.6% is incredible.
Okay.
So just Google I bonds.
All right, I bonds. All right, Stewart Welch from the Welch Group, some good information this morning. We do appreciate it.
Thank you, Mike.
All right, we got the Good Day Buzz on the way. Stick around.